Good morning, it's Donal Lahan. I'm a partner in Deloitte Consulting, and I'm also the insurance leader for Deloitte Ireland. I want to welcome you on to our second webinar in our Deloitte Insurance webinar series. This webinar is called New Asks and New Answers Drive the Need for New Stories. And our speakers and discussion topics are as follows. First of all, we have Mike Ennis, a director in our consulting practice, talking about briefly global and local trends in consumer behaviours. Second of all, many of whom you know, who works very closely with the Irish practice, is Nigel Walsh, a partner in Deloitte UK, and he's going to briefly discuss about new products, solutions and business models emerging. Thirdly, we have my colleague in consulting, Dylan Cotter, who's going to talk about the changing story and narrative. And then finally, we have Sean Smith, a partner in risk advisory, who's going to talk about regulation and conduct considerations. The presentation we plan will take about 40 minutes, and then the idea is that we will take some QA questions from yourselves. So during the presentations, if you have any questions, please use the QA box below, hit questions, and I'll try to capture and ask the panel questions as we go, as we get to the end. So I'm going to hand over now to Mike Ennis, who will kick off the webinar. Cheers.
Great, thanks Donal, and good morning everybody. So what I wanted to start off with was talking a little bit about a study that Deloitte have been doing over the last couple of months, and it's actually called the Global State of the Consumer Research. And effectively what this is a customer sentiment survey that we've been carrying out across the globe, so across about 18 countries, about 1,000 participants per country. So it really has quite a global feel. And one of the things we want to try and get a grip on, particularly over the last couple of months, was customer sentiment. And what we're seeing is, the consumers are in the middle really of kind of a two-pronged crisis. One is health, as you can well imagine, and the other is around financials. And this is important because consumer sentiment typically drives behaviours around purchasing and spend. And that's important to understand where consumers are as we look at insurance, but across a broad range of other industries also. So just to note, on the right-hand side of the page, you'll see there is an interactive dashboard that is available to everybody. It's publicly available on the link at the bottom of the page, and you can look at that and browse by country, by different types of consumer segments, by industries, etc. And obviously there's one there around insurance, transport, mobility, etc. So we've taken the time to really try and understand customer sentiment in these times and understand what that means for purchasing sentiment and behaviours. If you can go on to the next slide, please, Lindsay. So what are we seeing globally? What this is at a very broad level is what we call the safety index. And effectively what that means is how comfortable or safe do people feel to return to what you might call normal activities. And those normal activities would include things like returning to work. So we know over the last couple of months, lots of employees have been working from home. Many, unfortunately, have been furloughed temporarily. So this safety index effectively is a barometer of people's perception around the safety to return to normal activities. So, going to the store, going to stay in a hotel, taking a flight, etc., etc. So what we can see actually is that people are feeling safer. This is what you're looking at here is a rolling forecast from May to June. So from May to June, the sentiment index is moving in the positive direction. So people are feeling safer to start carrying out normal activities. But what's also important to note is that, still 50% or more are feeling unsafe to carry out those activities. If you look at the right-hand side of the page, where do we fit? If you look at Ireland and the UK as an example, in terms of the global average safety index, we're a little bit below the average at around 30% or so. But if you look at the top end of the scale, you can see countries like China, and you might imagine that China is a little bit more advanced in having to deal with the pandemic, and therefore they've reopened a bit sooner, and the population is generally feeling a little bit safer. I wonder, United States is number 3 on the list in terms of the safety index. I wonder if that will change based on recent activities. So we know a number of states in the US have now reclosed bars and restaurants, etc., and are shutting down. So I wonder how that will change next month. But again, please feel free to look at the index and check that out over the next couple of weeks. If we can move on to the next page, please, Lindsay. So what does it mean for Ireland? I'm not going to go through all of these, but I thought I'd pick out a couple of ones just to give you a sense of what this might mean for the insurance industry. So if you look at the left, the health concerns, so 50% are still concerned about their physical health and well-being, and 28% are less anxious than they were last week. I guess what that means really, to try and translate into insurance terms, is, and we know this from history and previous recessions or global shocks, that in these times consumers tend to revert to what we call kind of protectionist behaviors. So how can I protect my health, my family, my home, my income? So we could certainly see an increase in potentially health insurance, but also some of your life products around potentially serious illness or income protection. Those are typical behaviors that we've seen historically. Financial concerns again would be an issue. So you may see people start to try and protect their income in the event that they are made redundant or they are furloughed in some shape or form. We may see some behaviors like that. If you look at the travel and hospitality sector, what we have done a survey on there is again people's willingness and desire to resume normal levels of travel. And basically what we're seeing, if you can look at the indices, we're seeing somewhere between 40 and 80% of the population still feel unsafe to resume normal travel and hospitality activities, like take a flight, rent a car, take a cruise, etc., etc. So you can imagine that the impact on that would certainly feel like less renewals and potentially new products around travel insurance. But you'd also may see, for those that are traveling, you may probably see a reduction in the number of severity and frequency around claims. So those are likely outcomes over the next period. I think if you look at the auto and the mobility space over on the far right, certainly 58% are looking to keep their vehicle a little bit longer. So you can expect vehicle registrations will be down, new vehicle registrations will be down. And we've seen that April to April last year, new vehicle registrations in this country were down 90%, and that's not too surprising. But we may see that trend continuing over the next period. I think what you're also seeing, and we've seen this in the UK, but also more globally, is consumers are starting to consider other modes of transport. So what we're seeing in China and in the UK is traffic volumes are now starting to return to normal, or certainly pre-COVID levels. And that's for two reasons. One, the economies are opening up, which is great. But two, people are avoiding public transport for obvious reasons around health. And what that's doing is, we've seen it in, as I said, China and the UK, traffic volumes returning to normal, but also people are considering other routes of transport. So we've seen a big increase in e-scooters. Again, in the UK and across many European countries, e-scooters have gained huge popularity because they can provide a relatively safe means of transport where people feel their health is not being jeopardized. I think if you just move on to the last slide for me, please, Lindsay. So the last thing we wanted to talk about very quickly is what we call social sensing. So this is research that we carried out in the Irish market, gleaning publicly available information from social media, blogs, etc., etc. And what we really want to try and do is try and get a almost on-the-spot barometer of consumer sentiment. What are Irish consumers feeling and what are they thinking? So what's on the mind of Irish consumers? I think one of the things that's important is consumers still want to feel that they can contact their insurers, and they still want to feel that they have an engagement with those insurers. But as you can imagine, a lot of face-to-face contact has been eliminated because of shutdowns and COVID. So consumers have been forced onto other channels, typically contact centers. And we've seen, a rise in complaints around backlogs for customer queries in the contact center. We've also seen, where some insurers, and this is not just in insurance, this is across many industries, where their digital channels are immature. Many businesses have been exposed through inability to deal with customers through digital self-serve or digital means, and that's put a lot of frustration on consumers about just contacting their insurers and their service providers around different offerings. The second thing you'll see is consumers want more control, and this and all of these sentiments as I go through them largely existed pre-COVID, and what we're seeing is COVID has accelerated that. And if I touch on the control piece, consumers definitely want to feel that they have more control over their products. If my vehicle is sitting in a driveway 6 days a week, I don't want to feel that I'm paying a 12-month insurance policy. I want flexibility. So we're starting to see much more urgency around usage-based insurance, and again, flexibility around how I use the products that you provide to me. The third thing is around personalization, and again, this is not new, but I do think this has been accelerated because of COVID. People want to feel that they are getting relevant, personalized insights, and again, this is really around pushing the digital agenda. So I want to feel as a consumer that I can amend my products, I can look at my transactions, I have more control around flexibility around the products that I use, etc., etc. We're definitely seeing a bigger push and sentiment around that. And then finally, I've talked a little bit about public transport. As I said, we're definitely seeing traffic volumes increasing, and even though public transport is back up and running, people are still avoiding that, which is pushing them to other means and modes of transport and mobility. So I hope that's given you some sense of where globally consumers are over the last couple of months, and what the Irish consumer sentiment looks like. So I'm going to hand over to Nigel to talk a little bit about the new product solutions and business models. Over to you, Nigel.
Thanks, Mike, and good morning, everyone. Delighted to join you here. I was hoping you weren't going to talk about e-scooters and my passion, or not for the things, but they are inevitable, I think, right now, and I suspect I'll be very happy about them in the coming months and years as everyone starts to hop on them, hopefully safely. If I jump into the first few slides, I'm going to build on what Mike shared. For those that joined us last year or have seen some of these things, you have heard me talk about cake, not because I like baking cake and eating cake like many of us during lockdown, but actually it's a really good way of bringing together the analogy of how we just get the thing that we want as opposed to the ingredients that make up those. And I feel some of the things that we've seen as a direct result of COVID have actually really helped here in terms of driving the pace of change and the need for moving. So there was a thing flying around the internet. I won't take any credit for the graphic, but what was the biggest driver of digital transformation for your company? Was it the CEO, the CTO, or COVID-19? And I think in many cases we've seen it generally be COVID-19 has helped accelerate the things that we've always wanted to do or know about. We looked at a number of key shifts back in 2019, and actually, if we look now, the one I'm going to focus on here is that the resistance towards innovation and automation and all the things that we thought was coming, but we weren't very quick to respond or didn't see them as a huge priority against other things. What we're seeing now across our client base and across countries is genuinely some of the simple changes that we thought would emerge through evolution and natural change have really jumped forward at pace. And people are moving proactively towards, building out industry 4.0, or if we were starting from scratch, what would it look like? So if I jump onto the next slide, what you'll start to see here, I've broken it into two segments, in the consumer segment and then the SME space. Consumer, really interesting. I've got the channels in the middle. I mean, we've started to see, direct hasn't changed too much, intermediated for consumer hasn't changed too much, but embedded, i.e. what are we starting to see where people talked about previously, are these now being embedded into the overall product or thing that I actually want in the first place? Pretty much, as we're seeing more and more of these, which is actually quite exciting. Obviously, we saw a whole host of refunds from insurers. We saw government step in, regulators in the US, Singapore stepped in across different lines of business. And actually, there's been a greater awareness of what insurance is, sometimes for the wrong reasons, sometimes for the right reasons. If you follow things like Wimbledon, they were one of the only folks out there that had pandemic coverage and got some great stuff around how they had been paying out for years or looked after for years. On the SME side, a different story, and actually I'm going to focus on this quite a bit because actually this is where a lot of our energy and effort's been spent around how do we look after that 98% of our workforce or businesses that are out there that are small to medium enterprises. And I've broken it into two areas, micro and medium. So on the micro and medium side, both on the direct engagement hasn't changed too much. But one thing I have seen, or we started to see globally, is actually the desire for information, the desire for engagement above and beyond just insurance has shot up. Small business owners don't always know where to go to or who to turn to for advice, for insight, for information, and actually haven't got the time or bandwidth to go to lots of different places. So back to the whole analogy on cake, if you can give me everything in one individual place, would I come to you where I could start to turn on options or turn off options? I mean, I was joining webinars with some of the SMEs around tax schemes and that sort of stuff, and people were asking genuinely heartbreaking questions and things like, you know, can I furlough a member of my family in the UK here? And there's those sorts of questions you start to realise that we don't often know where to go or where to get this information, which gives us an opportunity, I think, in insurers to try and provide more than just insurance. You know, be the overall cake here rather than just an ingredient to solving someone's everyday business. So some really interesting things coming out of this one. If I jump to the next slide, I'll share these through actual examples. And again, we broke it down to some of the various different sizes of organizations and across the value chain. And the reason I've done it this way is what we're going to share now is none of these things are net new. There's companies out there doing these things in silos or in pockets. I think COVID for me has very much seen lots of these things become much more cohesive in the story. So they've all joined together. Tesla, we've been talked about for years, and again, there's a darling of the stock market, whether we like Elon Musk or not. But again, the fact that they're embedding insurance into all these things is become stronger and stronger, and you see more people just worrying about the driving experience and everything else rather than that. If I jump into a few of these other fellows though, folks like Rover, this is actually the old Regis brand, similar to the WeWorks of the world. Then you go on to rent an office where people are starting to come back in different spaces. That's now got embedded and built-in insurance into the overall proposition there. So it allows you to pick and choose and give you options about the things and support that you want, not just a desk or an office space, whatever it might be, but actually insurance and liability and cover. And that could be general liability, it could be health or so much more. And they're quite interesting for me. I think what they've done and how they've embedded those is quite exciting. You jump forward, you see what Thimble have done. Thimble has actually changed the business model of insurance. So typically we always talk about annual policies and whatever else. Thimble out of North America have written, you know, hundreds of thousands of hours of policies now. They've actually just partnered with Hiscox in North America. So they've generally changed the way and what you've built, or what you buy, similar to what Mike was saying with regards to telematics. So you actually feel like you're getting a deal for what you want and when you need it. And then one of the ones that we built, I'll come on to a bit more detail in a second, but Aviva, again, just giving people the flexibility and bringing things together. So rather than having individual product and customer journeys for each individual line, actually bringing them all together in an industry first here in the UK and doing it quite quickly is actually very, very exciting. I guess I can't really pass this slide without mentioning Lemonade. All of us in the industry have been watching with bated breath over the last couple of years and saying, oh, it will never take off. And it's an exciting thing. And we've had different folks on different sides of the fence. Obviously, with their IPO this last few weeks and seeing the success so far of both the stock market's reaction to, I think it's actually really encouraging and good for all of us in the insurance industry. That shows that technology enabling all these conversations is actually quite an exciting journey going forward. If I jump to the next slide, this next one actually breaks into some of these in the SME space. And why I like this, I just wanted to try and highlight, I think I've talked about Hiscox and Thimble in the middle, but why I'm highlighting this is actually, I'm starting to think about who owns this customer of the future altogether. And as an insurance organization, I love the stories around the Avivas doing multi-product and making life easy for customers. I like the Hiscoxes of the world making the business model and how you're buying and what you're buying interesting. But then I jump out of this a little bit and I go, well, Tide and Hakoda. Well, Hakoda's a new invoice insurance business here in the UK, and Tide is a business banking account. These folks are getting together at the outset and bringing together services that make your lives easier or make your customers' lives easier, and bringing all those things together in one place. Question for me is who owns that? Who owns that conversation? Starling Bank, again, new challenger bank in the UK, launching in Ireland. A great conversation, but again, they've got a lovely concept around marketplace, and they've brought together a number of providers in the personal line space over the last few years, where you could get mortgages, personal travel with AXA, car insurance with Churchill, and all that sort of stuff. Well, that's now applied to business banking, and I think there's I'll share an example of that in a second. And then others, whether it's Cigna and Oscar, Next Insurance, where they're engaging in blogs and where people actually are. There's some just really lovely examples of all these things coming together that I think have been accelerated massively. The point here, as I say, is these aren't net new. They've existed for a while, but what's definitely happened is the acceleration of these post or during COVID. And I don't think we're nowhere near through it at all. And I think we'll see a lot more of these come together over the coming weeks, months, and years. If I go to the next slide, the other thing I've noticed is a shift in what these folks do. So Ocado, for those that don't know, there's an online supermarket here in the UK. We've used them here personally for 10 years, love them. It's, deliveries to your door. We don't miss going to the supermarket or whatever else. There's things that you do miss out, of course, but actually they've done a really, really good job of it. What's been interesting with Ocado is they've shifted from being an online supermarket to just Ocado, and they're dropping the supermarket piece. And I wrote about this a while back. Whilst they're still delivering and doing stuff with their own direct product, they had a partnership with Waitrose. They've now partnered with, I think, Marks and Spencer's and a few others. Actually, what's really valuable here is the technology. And if you go back to us as insurers, where we often struggle is how we leverage technology quickly and efficiently throughout the organization, back to how I said earlier, 2031 or 2030 now becomes 2021. Well, the same is true if you start to spot trends in the insurance space. So Root is an insurance company based out in North America, done a really good job. They've been through all the pain like many others around customer acquisition and stuff like that, but they've just launched Root Enterprise. Root Enterprise leverages the technology that Root built to go and build their customer base in the first place and to make it available to other people. And then you think, well, that's okay, it's interesting, it's direct. Well, that will never work on the broker side. Well, WeFox in Germany, I think they raised circa 250 million from Goldman's from memory. Again, broker intermediated, providing best technology and tools for your agents and brokers to do their job efficiently in country. Well, actually, great job. Some really cool things coming out of these guys. And recently have now launched something called Cobalt, which is making their technology and the assets that they've built available to the wider marketplace. So again, Cobalt, a WeFox company here, you'll see, is leveraging their technologies for others to focus on or to leverage. And I do wonder, I guess if I leave you with a provocation, I wonder if many others that we've admired and seen go and take parts of our market share, will they be going to now open up their technologies? I mean, for example, will Lemonade become a technology company, not just an organization that just does new products to market, whether it's renters, which is small premium, but now pet and bicycle and others that they're doing going forward. So an interesting provocation. Last two pieces, I mentioned these really quickly. So the next slide will show you the Aviva story. And generally, the thing I wanted to share on this is nothing more other than the fact that it's multiple products, one place, refined question set, easy to engage, easy for the customer. The thing here for me is this combined offer. Again, it's not new in some markets, but certainly new in the UK. The combined offer was launched start to end. It was built in 12 weeks, launched in 16 weeks, and we're seeing people doing these speed to market trials really, really quickly. And I think that's really important to go and try and work out where we now see gaps in the market, ways to better engage our client base. What is it we want to do going forward to engage these? And the last example I'll share, I mentioned Starling Bank. I've long been a Starling Bank fan. Anne Bowden and the team have done a sterling job on the next slide. I talked, I think last year, that people saw, again, there's a write-up of this about how people like Monzo and some of these new banks were building these marketplaces or ecosystems, whatever the words were we were going to say, and it worked for personal customers. What we're seeing here now, I think is 170,000 business customers. SME is a huge, huge opportunity for many of these insurers. what they're doing here is they're going beyond just the current account and transactional nature of servicing things that way, but actually they've now got energy switching with a company called Bionic, which will help you find the best deals on energy. They've got health insurance with Equips Me, and that was a new organization founded by a former AXA executive. And then they've gone a stage further than that, and they've gone back to my very first point around how do I be there for you going forward. They've launched business toolkits, and business toolkits can be anything from freelancers, contractor support, but it might be invoicing, VAT calculators, guides, self-employment stuff. So we're seeing people creep into spaces that we would ordinarily see as insurance or otherwise. So I think some really great examples that are live in the market today, where people are getting out of their comfort zone and doing way more than just the product of insurance, way more than just the ingredient of insurance, and supporting customers in whole new ways. I guess that my final takeaway, I think the one thing I'll say, and a lovely handover to Dylan, is it really is time for telling a brand new narrative and a brand new story. So thank you very much. Dylan, over to you.
Thanks a million, Nigel, and good morning, everyone. I'll kick off with a quick intro to Acne, because you may not be familiar with us. So we're a creative agency network that's owned by Deloitte. We're headquartered in Stockholm, and we have offices around Europe and in Asia, and Acne Dublin is the newest office in the network. And we do branding, advertising and content on an agile model. So it's fast, it's high quality, and it's data driven. And there's a full list of everything we do on that slide, but basically we do brand storytelling in all its different forms. And with the kind of changes that you've been hearing about from Michael and Nigel just now, so changes in consumer needs and wants on one side, and then lots of innovative product and service solutions on the other. I suppose the one thing that's certain is that continuing to tell consumers in Ireland the same story about insurance is not sustainable. It's not a runner in the medium term. Someone is coming with a new story. Someone is going to find a new sweet spot between those wants and those innovations, and they're going to wrap it in a compelling narrative, and that narrative is what I want to chat about today. And there's every reason to expect that they will win the hearts and the wallets of customers as quickly as Revolut has done in the banking sector. Revolut has a story of control, kind of like what Michael touched on earlier, a story of giving people more control over their money. And it's also got this kind of subtext of anti-bank, anti-status quo, anti all of the things that people don't like very much about the category. And there are obviously parallels between banking and insurance. They're both, I guess, low love categories, and people are ready to embrace disruptors in those categories even more than they are in other categories. And if we wait until after Lemonade gets here, or whoever gets here first, if we wait until after that to try changing our own narrative, it'll be exponentially harder to do that, because then it looks like what it is. It looks reactive, it looks late, and it looks like we're driven by our competitors rather than our consumers. The good news from a storytelling point of view, and this is what I want to emphasize today, I guess, is that a little innovation goes a long way. So when you look at the disruptors elsewhere, as you can see on this slide, some of them are radically changing the model, but most of them aren't. Most of them are just tweaking it. So they're improving the UX, or they're bringing insurance to a niche that was underserved up until this point, or they're using data to create a better fit of cover. But then they take that small point of difference and they use all of the tricks of storytelling to amplify it up and ladder it up into what sounds like a revolution. And we've kind of made it easy for them to sound like a revolution. It's a very homogenous category, and that's news to anybody. I've worked in ad agencies with a few different insurance brands, and the raw material from one insurer to the next is pretty much identical. And there's some really good creativity out there that can create a different outer layer, but essentially the story is the same, and consumers can see that it's the same. It's protection for what matters. It's delivered with a tone of empathy. It's a promise of getting things back to the way they were as seamlessly as possible. And then, because none of those things create differentiation, there's always this pressure on price to ultimately create differentiation. And price is a very unhealthy way to create differentiation. I think everybody would accept that. Whereas innovation amplified by storytelling is a much better way. So what I want to chat about in the next couple of minutes is, I guess, just to offer some examples, and that's all they are, is examples of new stories that we could tell together about insurance by combining a little bit of innovation, some of which already exists in this market, and then combining that with storytelling. These are not ads that I'm going to show you. They're undeveloped examples of themes to explore. And a caveat on them, which is important, I think, is they're not new concepts to any of the people in this virtual room that we're in. You'll be familiar with them. You'll have names for them, but the point is they haven't yet been turned into compelling brand stories in the market. And I think the first insurer to do that well has a chance to create differentiation and put clear blue water between them and other insurers, and do it based on something other than price. So this is the first theme. So insurance that knows you don't like buying insurance. And insurance is a grudge purchase. And one way to improve that is to simply minimize the number of purchases involved, so minimize the transactions each year. So the innovation, if you could call it that here, it might be as lo-fi as a single annual transaction for all policies. So it's single renewal date, but it's taken a bit further to make it really feel like a single transaction. And as I said, it's not a new concept, but it's one that can ladder up into a fresh story. This next one. So the story here is that cover that changes more than once a year because you do. This little video that we made yesterday just shows the price of insurance on your car changing depending on whether the car is moving or not moving. So it's a simple kind of representation of what we mean by that. I guess smarter risk engines create more accurate cover. If we could just hop back a slide for 1 second. So smarter risk engines, what they're designed to create more accurate cover, and that allows for new narratives around how your cover is more nuanced, how it reacts to change in risk from one season to the next or in different days of the week. And the innovation behind that story can be very elaborate. So you can use real-time driving data to adjust your premium, or it can be more lo-fi. So it can be about more accurate annual projections of a customer's risk based on better overall data, but it's just a different story you're telling. And it's a story that's about data-driven cover where the consumer is less likely to pay for cover that they don't need. So the next and the third one is insurance for people who hate risk as much as we do. And for this one, I'm going to use a real example from NRMA Insurance in Australia.
As Australia's leading insurer, at NRMA we thought we could do more than just help people rebuild. What if instead of paying out after the disaster, we could actually pay people to be safer so they could avoid the disaster altogether? That's why we launched Safety Hub. It's a platform that's all about rewarding our customers for being safe.
Safety Hub uses over 90 years of NRMA claims data to identify Australia's greatest risks. Surprisingly, we found small things like clogged gutters in storms, worn-out $8 flexi hoses, and overloaded power boards are causing significant claims each year. We use geographical data to pinpoint homes at risk of water damage, fire and theft, and weather data to help homes in storm areas control their risk during extreme weather seasons. We then invited over 200,000 Australians to download Safety Hub, a custom-built app that paid everyday people in cash for putting precautionary measures in place. The app combined claims data with user profiles to serve up personalised safety tasks. And every time one was completed, we paid money straight into their bank account. If they couldn't safely reduce their risk, we also paid for certified tradespeople to complete tasks for them.
This is a first for an insurance brand. It's the first time an insurance brand has paid out before the disaster to actually prevent disasters from happening. It's the first time that an insurance company has rewarded its customers for being safe, not for how many products they have or how much they spend. And the response from our customers has been amazing.
So that's a new story. Insurance for people who hate risk as much as we do is how you might articulate it. And that example that you saw there is obviously backed up by a major piece of innovation, but even a scaled down version of that allows you to tell that same story. So for example, safe driving apps that reward people who drive less riskily. And at the moment, I think those stories tend to be told in isolation. So there's a campaign about an app like that, whereas instead, I think innovations like that can become the basis for a whole new brand story that, as I said, creates clear blue water with competitors. So in summary, I guess the point that I'm making is innovate even in small ways, and then a key bit is elevate that into a new narrative that creates brand differentiation based on something other than price. And the key thing is doing this before someone else does it first. And it's the kind of brand storytelling work that we're doing at Acne with all of these clients, and we'd absolutely love to chat with you about it too. So thanks for listening, and I'm going to hand over to Sean to talk about regulation.
Thanks, Dylan, and good morning, everybody. So I'm going to cover off some points on regulation. Hopefully, I won't put too much of a downer on some of the great ideas and innovation that the guys have talked about before me. I suppose the first thing I would say is, innovation is key. Developing these new products is key. But where we see difficulty and firms kind of run into challenges is where the first and second line go about this separately. So I think a key thing and a key measure for me, I think, would be to get your second line, your risk functions involved very early in some of these development processes. If we look at a lot of the scandals, a lot of the issues that have occurred over the last number of years, generally they haven't been poor products or poor product development. Some of them have, obviously, but mainly it's been because those products have been sold to the wrong types of people, sold through the wrong channels. Maybe the original purpose was lost along the way, and something else was done with that product. So it's really key that firms keep a track of how their products are being sold and where they're being sold and why they're being sold when they're looking at this. So just talk about the Central Bank Forum for a little bit. They don't have a mandate of innovation, unlike some other regulators. I think that's a key thing to understand when you're engaging with them as you develop out these kind of new areas. Regulation itself will always move more slowly than innovation will, and it always lags behind. I think that's going to become probably even more pronounced now with COVID-19 and some of the things we're seeing kind of coming off the back of that. So regulators really struggle to keep on top of some of these developments. That said, regulators, the key things that regulators are worried about when it comes to consumer protection are things like outcomes for their customers. So making sure that there's a good outcome is a key thing for regulators. Another key thing is transparency. So a lot of the time when we talk about innovation, we talk about doing things quicker, faster, cheaper. I would say that from a regulatory perspective, you need to think about kind of the transparency element too. So how do you tell that story that Dylan talked about? How do people understand what they're getting into, what they're buying, what it will mean for them? And there's lots of innovative ways that can be achieved as well. Like I think the one thing maybe that ties it all together, ties the regulatory side and the product development and innovation side together, is around that customer or consumer-centric approach. We've talked about that a lot throughout the various presentations today. So I think if people can focus on that, I think that will achieve a lot of what you're trying to meet from a regulatory perspective as well. So I'm just going to mention a few kind of more recent developments, things maybe you should be looking at as you go on this kind of innovation journey. The first is around the Consumer Protection Code. So obviously that is the key bit of consumer protection guidance, legislation, requirements, obligations issued by the Central Bank of Ireland. That's going to go through a significant review over the next year. So some of those changes will reflect some of the digitalisation, some of the things changing in financial services. It will continue to look at behavioural elements. So it's not a bad product, but it was sold incorrectly side of things. Culture as well, so the tone from the top will be a really important part. And then it will look at things like climate change and some of the more, kind of more cutting edge elements that the regulators are starting to look at now. I think a key thing ultimately coming out of the changes is that regulators are looking for open, fair and transparent communication. So again, going back to that transparency point. And there will be a big focus then on digitalisation and how firms implement that. And I think what's key there is that digitalisation shouldn't just be about cutting costs and making distribution less expensive for firms. It should be bringing something else to the consumer, something that potentially is provided by the brokers at the moment. Digitalisation channels should now meet that gap as well. So I think that's a big focus area for the regulator over the next year or so. Probably worth mentioning the Consumer Insurance Contracts Act as well. So again, this will put a much bigger emphasis on the terms and conditions side of the insurance contract. And I think for this, when they're being drafted, I think it'd be really important that the terms and conditions reflect what's actually happening in the process of procedures and things like that. If there's any gap, if there's any area for misunderstanding, these types of things will be read in favor of the consumer. So between that and the Consumer Protection Code and then some of the things we're seeing under COVID-19, we're definitely seeing a move away from kind of tick box compliance and a move away from that kind of very legalistic approach to interpretation of the insurance contract. And it's a much more holistic approach to meeting consumer demands and meeting what the consumer wants. And the next point then just worth noting is the fitness and probity and SEER. Now there's been a lot of delays to the SEER regime, but that said, there is a push on from the regulator to start kind of putting some of these requirements into what is already there. So we are seeing a number of firms starting to map responsibilities to individuals without necessarily the SEER being in place. And what that will mean is that there will be a clear link between the product development teams, the person responsible for that product, the person responsible for that service, and an individual, senior individual within the insurer. So I think that will lead to certain outcomes and potentially changes in behaviour in certain circumstances. Finally, then I just mentioned COVID-19, and again, this is just more of the trend I talked about just there. Regulators kind of stepping away from strictly what the regs say or what the contract says, and trying to make sure that insurers treat their consumers in a way that's proper and reaches the right outcome for those consumers. So I might just move on to the next slide then, and we just talk about some of the things that maybe firms can start thinking about and what they can start doing. So I think the first thing is obviously a product is developed, you create a new innovation, you've included your second line in that process. A big focus now from the regulator is around proactive monitoring. So a real big obligation on the board and senior management to keep their eye on how that product is behaving. Is it acting as you would expect it to act? Is it being sold to the type of people you would expect it to be sold to? What types of profits are you making of it? Is that in line with what you expected? And where it's not, they want quick reaction, I suppose, from the firm to try and address any potential consumer detriment or conduct issues that might be arising. Key to that kind of proactive monitoring and that kind of more day-to-day approach is really clear conduct management information. So in that regard, I think banks or insurers should be looking at kind of quantitative and qualitative things around those products, which will help identify kind of red flags and issues that may be arising in respect to the sale of these products. We mentioned the social listening tools earlier on. Again, they are an even closer ear to the ground, I suppose, than your traditional MI, that you can quite quickly pick up issues arising across chat rooms and things like that. Now, obviously, some of that will be spurious, some of that will have, you know, won't have a specific impact, and maybe just a particularly disgruntled customer. But there could be big trends there and things that quite quickly escalate into something that's much more important to the insurer. So I think it's really important that things like that and other more, you know, current day-to-day type tools which pick up any issues, you know, are used as well. And then finally, I'd say effective governance. If the board and, you know, the governance processes and the relevant committees all put consumers at the centre of what they do and the centre of decision making, then generally, you know, backed up with the right kind of culture, you will generally reach a place where you know, you are getting that balance between, you know, growing your firm, growing your bottom and top line, but also keeping your consumers happy and meeting regulatory obligations. So with that, I'll hand back to Donal.
Thanks, Sean. Really appreciate that, and I want to thank all the speakers and presenters. Now we're actually going to have a brief panel discussion. I'm just looking at the time, so I'm conscious that we need to commit to the timeline. I actually have a question come in, and I'll read it out, and I think it's directed towards Dylan, if that's okay. So, as well as talking about insurance in a new way, a lot of disruptors are also using media differently. Can you talk about that and how important it is, and are there any lessons we can learn from that? So that came in.
I think that's a very good point, and I think, like, if you look at Lemonade, for example, they've made some mass market work that gets shared around and creates noise, but I think a lot of the hard work and a lot of the kind of heavy lifting is done through really cleverly targeted social, and I think that's the case with a lot of the disruptors that we're looking at. And it's about, I guess, making sure you're surfacing the right products to the right people at the right time. So, for example, if you're in New York, you're not going to get car insurance stuff all that often. You're going to get a lot of renters insurance messages. You're going to get a lot of pet insurance messages, and it's also making the brand experience a very shareable one. So making sure that it's built in a way that is technically, but also kind of experientially, the kind of stuff people are going to want to share, so that happy customers are turned into advocates probably in a more efficient way than some legacy systems would do. So I think there's good lessons there, definitely.
Great.
Dylan, if I can add to that really quickly, we're seeing it across all sectors, though. Given the fact that we're all in this new Zoom, Teams, WebEx style world, we've seen it happen everywhere. It's not just personalized. We've seen it in SME, we've seen it in corporate commercial. You know, brokers that would wander around the floors of Lloyd's in London previously, or on client sites, are now doing it in a completely different way. And our engagement's gone from big, thick reports and you know, traditional media into new, bite-sized, easy to consume, someone at the end of a channel to pick up a phone or a video call to, and have that level of confidence. So it's genuinely been a lovely, lovely experience for many to go, I can get access to experts. And if I can't do that, you've seen many of the big brands partner with law firms and accountants and what's not to get better advice to their customers.
Great. And actually, Nigel, we have a question here in the sense of talking about the innovation and maybe not the disruptors at the value chain. You didn't mention GAFAs there, and I suppose the question here is, do you see the GAFAs playing an end-to-end role in this, or do you think that they will focus on elements of the value chain?
Oh man, the GAFAs, and for those that don't know the term, the Google, Amazon, Facebook, Apple, I'll make a confession here as well. So I've written about this a lot. There's a poster inside the Deloitte office in London saying Google will not become an underwriter. And on the other side of the fence, I am leading the Google relationship for insurance inside Deloitte. I don't believe they will become an end-to-end player. Is my personal perspective on this, but they absolutely have a massive part to play across all lines of business and all segments. If you look at any personal lines insurer, the likelihood of them using Google data today is extremely high. The same is true for SME and corporate, whether it's geospatial or mapping or property data that's out there. They have an amazing enterprise software capability that will support you in doing what you do, but they don't know the regulation like Shaw. They don't know the capital requirements. They have no desire, is my understanding, to do these things. They have been in and out of the market in certain countries. They have been in and out of the comparison market. Different parts of the GAFA network have licenses for things like payments in Ireland. There's a big conversation going about what's happening in India with ACO and those sorts of guys. So they are definitely part of it. I don't see them coming in and being a lemonade style, let's go take over it from anything else. One last one, for those that follow Brit in the UK, Brit launched a joint venture with, or a partnership with Google called Key. And actually it's the first automated London market follow syndicate using Google technology. So again, Google's not the underwriter or actuary or whatever else that sits there. They're actually part of the overall platform. And that partnership with Brit and Key is very, very exciting. Loads of stuff online about it, whether you want to listen to the podcast with Mark Allen and James Birch, or a bunch of others. So part of the solution as opposed to a new competitor.
Great. Mike, maybe I'm just conscious, I'm looking at my iPhone, I'm conscious of, maybe Mike, you and I have been in the Irish insurance industry many years. I won't give a number. What's your sense of, even though we talk about consumer behaviors and changes that are happening, maybe accelerated by COVID-19, but had already been happening, and then the disruptors coming in, and then the need, as Dylan covered, regarding the changing the narrative, and also even Sean talking about regulatory considerations. Do you think the insurers in Ireland are going to kind of still, accepting all that, will still wait, saying that these are going to happen, but it's 3-5 years, and we'll try to maximize what we are, and when change comes, we'll react to that? Or do you believe there is actually a shift now to actually embracing some of these, and how do we get ahead of the game, as Dylan said at the end? Mike, I think you're on mute. Okay. Mike, I think you're on mute. Maybe, I think there's been a technical issue. Sean, and the final question for you is, how is the regulator, whether it's local or more regional based, embracing this discussion around innovation? I know we spoke about consumer outcomes and getting the outcome that the consumer expects and needs. Do you think that they are embracing or getting involved in these discussions around innovation and disruption?
Yeah, look, I think they want to be seen to support innovation, but as I said, they don't have that mandate. So you look at the likes of the FCA, they would be much more proactive in this space. They would have things like sandboxes, which the old governor has said, that will never happen in Ireland. So I think it will involve quite a bit of interaction with the CBI, bringing them along the journey, helping them to understand that, digital and other innovations, it's not that, the old ways were the best ways. Sometimes the new ways can bring a new way of thinking, a new way of meeting some of those consumer protection concerns, and do it in a much more efficient and effective way. So it's just a matter of bringing them along. And I think, they have issued a paper on digitalisation. They are incorporating some of that into the new Consumer Protection Code. So they're very aware of it. They're on top of it. They are probably a little bit cautious, I would say, which you'd expect from a regulator. And it's there to be proven, so it's there for the industry to prove it to them that it will work well.
I can jump back in now, Donald, if you can hear me.
Briefly, because I think
we've resolved the technical issue. I was just going to jump in on two things. One, we know in the UK that Amazon are trying to build out their insurance offering, but if you think about the simple size and scale and influence that the likes of a Google or an Amazon have on the consumer base is enormous. But in terms of sentiment locally, I think the sentiment that we've picked up from consumer base here is that they do want more flexibility. They do want to see evidence that insurers are being innovative and flexible in how they offer products to the consumer base. If we look at the US, where we're seeing more usage-based products, what we're seeing actually is not necessarily around new business, but actually at renewal time. If my vehicle is parked in the driveway 6 days a week and you don't have a usage-based offering that gives me some flexibility, I'm going to look at alternatives. So actually it's being used very much as a retention strategy. So if you don't have an offering, actually I'm going to go elsewhere. So what we're seeing evidence is, that lack of innovation actually is going to hurt retention. And that's one of the things I think the insurers locally need to consider around those flexibility now that consumers want and expect.
Brilliant. Listen, really appreciate your time and support and conducting this webinar and the input that you prepared for this event. On behalf of Deloitte, really appreciate all the attendees. I think if there are any topics that you want to follow up with the team, whether it's around the innovation, whether it's around the telling the new narrative or explaining insurance in a different way, the consumer insights that Mike gave, or the regulatory considerations, certainly reach out directly to the team. This actually is being recorded, so we will share both the slides and the recording tomorrow or the next day by Friday. And just we will have another webinar as part of the series on July 22nd, but that's primarily for our life and pensions insurance community, but you're all very welcome to attend. So on that note, I want to thank Nigel, Dylan, Mike, Sean, and the support team that have really helped to pull this together. So stay safe, have a great day, and reach out if you have any questions. Cheers.